Hey, what's going on, everybody? Welcome to this week's weekend prep and review, and it's also going to be the Small Account Masteries February performance review as well. So thanks for hanging out as I review these trades and we talk about what's happening. So the plan or the goal or the purpose of this video is we're going to review some of February's trades. When I say review some of February's trades, it's honestly just going to be just February 27th and 28th, and then we'll review the rest taken throughout the week. And if you're like, okay, well, why don't I review some of the other trades taken here? And that's simply because they were already reviewed in the prior week's weekend prep review. So if you have any questions about some of these days, just go ahead and check out one of those other um, weekend prep and reviews because I reviewed all of them. There's no reason to go ahead and go back through it. But we are going to talk about the winning numbers, like the win percentage, P&L, things like that. And then we'll also go ahead and discuss, I'll show some sectors that I think are starting to show some strength, some setups within those sectors to prep for the upcoming week. All right, so let's go ahead and dive in. So this right here, if you look at all of, this is the month of February, and these are for all the trades taken in the small account mastery. We have 4 losing days and more green than red, so that's always a positive. But if you were to calculate all the wins and losses here, this will equal a total of $852. And I'll show you the numbers here in a minute, and we have about a 65% win rate. I would like to tighten that up, so that's something I want to focus on heading into the week ahead. But 65% win rate, total net profit of $852. And like I said, you can go ahead and check out those other weekend prep reviews to recap the trades taken on these days. Now I'll show you some other stats, and you're going to notice that the numbers aren't going to add up, and I'll explain why. Simply, I'll actually, instead of bouncing back and forth, I can show you something right here real quick. So you see how it says February 1st? Let me change the color there. It says February 1st up here to February 28th, and that's when it gives you the stats right here. But if I also scroll down and you see how it's giving me the P&L for March, that is because these winning trades were opened in February. Now you may be asking, okay, well, why is that important? Because whenever I go to the detailed report only gives you the stats, because right here you notice how this number doesn't add up. It gives you the stats only based on trades that were opened in February. But when you do the calendar, it does it where it was closed. So that's why this doesn't add up, because there are some trades that we were profitable on that we opened in January, but we closed in February. So that's why that number doesn't add up. Our P&L, or sorry, not our P&L, but our winning trades might be a little bit different, but I imagine not too much different. But overall, the reason I'm even showing this page is simply because I want to point your attention to, we have about a 65% win rate from trades that were opened in February. But yeah, that's pretty much it. We only had 3 losing trades in a row, but we had 6 wins in a row. So yeah, that's the breakdown. That's why I wanted to show you this, and that is why this doesn't quite add up. But feel free to go back to the calendar and pause it and do the math yourself. But that is why it gives you that little difference. Okay, so let's head on over to the calendar. February 27th. Let's recap some trades that were in. So this one, the SPY Butterfly, super, it was a baby win here. But this was just a lotto target butterfly. You know, it's the concept of reversion to the mean. Whenever the market gets extended, it ebbs and flows, right? I'm sure many people have heard that. So as we got extended to the downside and we hit this 200-day SMA, I was looking for a rally back up to the 21 EMA. It offers a good risk reward. Just like it says here, we placed a 7 days expiration out of the money call Butterfly as it was coming down to the 200-day SMA and just looking for a reversion to the 21 EMA. You know, you're just looking for a bounce. And what's really good about these is they offer a really good risk reward. So in this case, we got in for 79 cents. So it's 5Y, sorry. It was a 400, 405, 410 butterfly that we got in for 79 cents. So this means that we got into position for a max loss for one position of $79. That is the most you can lose. But for a max profit of 400 and make me do math on the spot. What 421? Something like that of max profit, right? But nonetheless, that was the plan. It was a small winner. And just like I said here, these are the alerts. I actually been copying and pasting alerts in here. So that is the alert. And I send this a screenshot to everyone when I do the alert to everyone in Small Cap Mastery. And here's right here. We closed it. It expired that Friday. We're closing the Lotto Butterfly for a small 27% winner. To the SPY was again rejected. Pretty solid at the year-to-date VWAP. So we'll just go ahead and lock the quick game. We closed it for $1. So it didn't get rise as much as we were expecting. So if we look right here, here's a 30-minute chart. See, we got in here and then spiked up. It got rejected. It started to fall back down. So, okay, we'll take the small win. It didn't rally as much as I was anticipating. So it took the small win there. We'll go on to the next day. Right here, we opened some trades. CLF, Disney, and Etsy. Oh, and all of which we closed all this weekend too. So this is where we opened them. And you can see right here, I'm actually just want to go ahead and jump to March. So CLF, Disney, Etsy. You see right here, I opened the positions. I'm going to go ahead and go to the area where I closed them. And we closed them in March. Okay, so Wednesday. So this is the Etsy and Disney setups I just talked about. You see, I closed them, and we did end up taking losses on this. For this day, we took a total of $312 loss that day. So let's go ahead and check out Disney. What was the setup on Disney? So you see, we opened a Disney 7-day sale expiration called debit spread. We entered the 100-105 call debit spread for 209, meaning risking $209 to make roughly make almost $300. And what was the setup? The setup we were looking here is, so big picture, I was looking for the market to bounce sooner. So if you've been tracking the market, you know the market rallied pretty solid on Friday. So I've been prepping for this bounce, getting into position, but I had the right idea. I was just early, which is kind of frustrating, but it happens. I mean, that happens in trading. You have the right idea, but you're a little bit early. And but yeah, that's what happened. So the setup here is, like it says here in my screenshot, I started using TradingView a little bit more. So it came down to this HVA level right here. I was looking for price to stall. Let me change my color so you can see what I'm talking about. Price could stall here and look for price to revert actually just to the year-to-date VWAP, right? Because that's the January year-to-date VWAP. And well, what ended up happening is Disney wasn't done falling, and neither was the market. The market actually kept falling. We closed the position for 33% loss. And so basically, if the trade was for this HVA to hold, and the market was looking pretty weak at the time, I was all right. I'm just going to manage this position. And as we started to just keep falling, and I was like, okay. And we got below the area. My stop loss levels were triggered, and hitting stop levels, like I said, and then just closed the position. So no big deal there. Honored the stop loss levels and moved on. So the next trade was Etsy. Etsy right here, you see we opened a 17 days to expiration put credit spread. It was offering a one-to-one trade. So Etsy has a high IV stock. And what exactly does that mean? It means the options are pretty rich. You could enter an out of the money call credit spread or put credit spread and get a pretty solid risk reward and have a little buffer. But like it says here, I was just looking for 17 days, looking for this all-time high anchored VWAP to hold as support. So as price was selling off down to the all-time high anchored VWAP, stop below, and looking for it to rally back up to this point of control. I was watching it for a while in the day, just letting price oscillate. I wanted it to reclaim the recent falls anchored VWAP right here, and we had the little wedge, and then boom, we got the breakout. All right, cool. And then that's when we entered the position long, looking for this reversion. Well, the market kept falling. Etsy obviously went with it, and I ended up stopping out for about a 40% loss as it kept on moving down. So if we come here, actually, as soon as we entered, it was looking pretty solid. It kept on rallying some, but then it did change its mind. So see, you got in here. I'm like, cool, we're going up, and market said nope, and stopped out. So manage our risk and stopped out according to the plan. And if you're asking like, well, what about all-time highs? What was making me think I wanted to buy that? I could just show y'all here real quick, just so if you're considering trading Etsy, who knows, it might be on the watch list later. But if you look at Etsy right now, Let it load. So this green line, so this is the highest Etsy's ever been. Here's an all-time high anchored VWAP. So what is that? Like, why is that important? It's kind of like the line in the sand. This is why I use anchored VWAP. So from the time of since Etsy's been alive and has rallied to the high, who's winning? Who's in charge? Even after this pretty solid sell-off. Well, once we get above that anchored VWAP, then the buyers are in control, meaning the buyers are feeling the less amount of pain based off of this largest swing high, and we finally reclaimed it. So we came down to it and was looking for that to hold, but like I said, we got a little shakeout. The market was in a tricky situation, or I'll say tricky spot, but stopped out as it was as it kept weak. So 40% loss, no big deal. Managed risk and moved on. All right, so those are those two trades. Took those two losses, and then on Thursday, our CLF position we adjusted. So what do we do here? Actually, I don't even know if I put it in there, but let's check here. So on this particular moment, so it said we closed up $110. We closed it on Thursday too, but this is the setup. I'll cover it quick. So larger time frame, it's pulled back to the 50-day SMA, like it shows here. Right, pulled back to the 50-day SMA, reclaimed the 2-year point of control, and looking like it wanted to rally higher. And the materials ETF was looking pretty solid as well. So this was the a little bit more zoomed in concept came here. And this is something I found pretty consistent trades in this. So I'll break this down for y'all as well. So it's obviously in a trend higher, right? Stacked moving averages pulled up back to the 50-day SMA, and it's pulled back. And you see this point of control area right here, this white line. So that's where the most amount of volume has been occurring for the month of February, right? And then so what I do is I get an anchored VWAP from the highs, and which is this other line. And I was like, okay, so if you think about it, so there's all these anchored VWAPs where the buyers are in control. But from this swing high, the sellers are in control. But once you reclaim it, you just think of it as a swoop to go back up because all the buyers are back in control. And just to give an example, I'll pull up the chart here in a minute. But as we broke, like it says here, 2030, entered long, scaled at our target up here at 2022, which is this point of control up here. In hindsight, obviously it kept on running, but I was in this market, I'm being quick and taking my profits at legitimate areas. And so like you see here, position management, we scaled out for a little bit of 50% return, and then as it hit our target, we closed out the rest for a 65% return on our risk. So we got into position for 105, scaled out at 160 and 174. Just to show you exactly how that works, I'll pull up CLF again on the charts, so you can maybe see exactly what I mean by the anchored VWAP swoop, if you will. So there was a long, and we got above this anchored VWAP level, looking for the buyers to remain in control, and look, it just continued pushing. Pretty good, but nonetheless, the plan played out accordingly, and got in and got out. So nothing, no complaints there. So that was CLF, and this was on Thursday. Okay, what happened on Friday? We closed another trade. Oh, that was CLF. That's when we closed the position at the target. So the first day we scaled out at 50%. My plan is usually to scale out half at 50% on the risk, and then holding out for my last target on the end. So come over here, and like I said, that's just when it shows got into position here. So you see we got in here, scaled out, scaled out. So that's all the trades done for the week of February 27th to, no, that is not right. February, I'm looking at my calendar and I'm going the wrong way. All right, yeah, February 27th to March 3rd. So that's all the trades we did there. That's the recap as far as the month of February. So like I said, 800 and a little over $850, 65% win rate. It's a combination of swing trading and 0 days to expiration trades. And but yeah, so hopefully you found that portion helpful. And next, we're going to go ahead and dive into the watch list and see what is setting up for the upcoming week and if we could take advantage of them. So let's go ahead and start that process. Okay, let's get this watch list started. All right, so big picture looking down, the indexes, and this is the way I am viewing it, and I am buying this dip. In fact, I was buying it a few days ago. I had the right idea, but I was early, and that's unfortunate, but it is what it is. And just like I mentioned it earlier, um, that's what I was talking about. But anyways, so let's look at the SPY here. We obviously rallied up to this little 3-month HVA. We stalled, pulled back down to this one. And also, we're now above what I am calling my bear market point of control, which is just a 2-year volume profile, and that happens to be where the point of control is. That is the price where the most transactions have occurred. So now let's look at it from a bunch of different angles here on why I am looking bullishly. Like I know everyone could plead a case for the bearish side of it. I am more of looking at the price action levels, putting bias aside, and just letting it unfold in front of me instead of having an opinion. So we are back above this point of control. We came down, we tested the 200-day SMA, and we are now obviously pushing up. Now, how high, I don't know, but I do know that there's going to be resistance right here, about 410-ish to 412-ish. And on top of that, as well as other reasons to be looking bullishly, is it's right here. It doesn't show much on the SPY, but the ES did hit the anchored VWAP. Actually, I'll just pull that up. And that would be more, I guess we'll say more accurate, simply because it traded pre-market whenever this whole news happened. Okay, so let's talk about some stuff right here. So big picture, I have my anchored VWAP, which is this dotted line. Oops. This dotted red line, that's all-time high anchored VWAP. So as price is below it, so I acknowledge that. So from all-time highs, the sellers are still in control, but it's pretty crazy. We're this close finally. And then also I have a year-to-date VWAP, which is this dotted blue line, and then a swing low, which is this dotted yellow line. And then this little black one down here, if you haven't heard me talk about, I've been talking about it a lot lately in my Plan of Attack videos, is an anchored VWAP whenever we made this last swing low and spiked up and then have been going up ever since then. So the way I am viewing this, if you think of it this way, so I'll get a really fat color right here. So about right here is where the 2-year point of control is, right? My bear market point of control is there. Price came down, tested this anchor VWAP and point of control. Now, the best way to think about it, if the market is going to turn and potentially start trending higher, I'm not saying rip your face off rally. I'm simply just saying, what if we start to like ebb and flow a little bit higher versus just frantically falling down. In order for that to happen from this last swing low, since we are above it, the buyers are in control since we've been pushing higher. And that's why I'm leaning bullishly. So this last swing low, we tested it and we tested the level where the most buyer or the most transactions have occurred. For me, this little level, it's really as simple as this. Like if we're above it, I'm gonna be bearish. If we start to get below it, I'll be bearish. That's as simple as that for me. Now, so got a few other things here and the ways I am looking at this. If we start to get above, so we got above the year-to-date VWAP, the last swing high VWAP, and we tested this VWAP. So that's a lot of WAPs that were tested or and reclaimed, which is great. Now, if we can get above all-time high VWAP and then this VWAP that I have up here from this swing high. Now, why is the dotted green line anchored VWAP important? Because if you think about it like this. So from this level, from this last major swing, that would imply that the buyers are in control. From year to date, that would imply the buyers are in control. We reclaim the all-time highs anchored VWAP. That would imply, since the bear market started going down, the buyers are in control in conjunction with this point of control that's right here. So we would claim those. Now, the green dot the green dotted line, this anchored VWAP from right here, is when the sellers became in control that pushed price down. Now, if we get above it, that would simply state that all of these levels, the buyers are in control. And that would, at least for me, mean we're at least going to come test this level before potentially going even higher. But I will say there's a lot of work to do. So if we look here at the ES at, let me crunch this up some. Sound effects not included. So from here, so this is the largest peak, right? All right, cool. But now we're going to have to climb up this peak, crawl back down, and then move all the way back up. 4,200 is going to be, I think, a tough target to hit, simply because we have to get above all this. But if we can get above these two peaks, then, it's all downhill from there. But I'm not saying it's going to be easy, but that is kind of the way I am looking at it. So all that being said, and that all the indexes look the same as that. So if I am leaning bullish, what do I want to do? What do I want to trade? How do I want to structure my portfolio? So right here is my sector breakdown. What I am looking at is, I think most of these tickers are going to need a pullback because yes, the last 2 days rallies kind of shook it up, but I do think materials looks really strong. We need to wait for a pullback. XLI looks strong. Need to wait for a pullback. Communications, I have a few setups in there I think look really great for getting into. And there are a few of XLY and SMH I do know look good. I couldn't find anything in XHB that I thought looked good, but I did find a few tech. Everything else, I did find a few financials. Even though it's rated at a 1, I still think it looks great. But everything else, I'm not going to participate in on the bullish side. But I do have a few set up here, and here is this if you wish to see how I'm looking at structuring those sectors. All right, so now let's talk about the trades. What are the tickers I am watching? Let's go with, let's see, all the materials need a pullback, so there's not really much to talk about there because who knows if we'll get it and when we will, so I won't talk about any materials. But anything like CLF, X, NUE, all of them look great for a pullback. Now let's go on down to industrials. The only one that looks the greatest in industrials, in my opinion, would be Caterpillar. I'm personally already in it. All of us in the small cap mastery are already in it. But I do think a pullback, if it can get a pullback, I still think it's warrants an entry. So I'll share this with y'all since that we could see where an entry may be. Now, the setup is simply it's bullish. It's above. It's all its moving averages reclaimed and pushing higher. Reclaimed this 618 fib level. And for me, like the way I'm looking at it, and all you need to do is wait for a pullback. I am targeting 260. But here are my stop levels below the year-to-date VWAP, which is this blue line, and this point of control. So I'm just looking for price to continue up to 260. Like I said, right now it is extended, but if you wait for a pullback, if we do get a little dip in the market and then continue up, I think that warrants a good trade on Caterpillar. But next up from there, we'll go ahead and talk about communication. So from there, I do like Meta does look great, but it's going to need a pullback. I'll put it up here as well because I'll cover it. And then another one in there, believe it or not, is Zillow. I did get in this trade with those of you in the options room and the small account mastery, but we did end up stopping out. But the setup is shaping up again. So let's go ahead and talk about Zillow. Okay. Well, before we talk about it on TV, let's talk about it here. All right. So right here, I have my 3-month volume profiles. So you know what time frame you're looking at. But basically, price has come down to the 50-day SMA, and we're starting to push up and reclaim the 3-month point of control. So it simply looks like it rallied up to this orange level. If you remember when we took this trade a few weeks ago, if you participated in it, that was this congestion area over here. So we're looking for it to stall. So I think it does warrant another test after testing the 50-day SMA. So the moving average is stacked positive down to the 50s, reclaiming the 21 EMA above this main point of control. So this is here, and I am targeting this level. Now let's pull up Trading View so you can see my plan. All right. So from here, from a I use TradingView as a level of a way to identify buyers and sellers. Basically, is how I use TradingView because it's anchored VWAP and point of controls and whatnot, and volume profiles are very simple to plot. Not so much on Thinkorswim. So let's go ahead and do this real quick, breaking it down. Okay, so I have an anchor VWAP from this swing low, from this swing low, from this swing low, and all in a nutshell, I mean, it's above all of them. That's all you really need to know. Cool. So that basically the buyers are trending it higher as we came down and hit the 50-day SMA. Now, this anchored VWAP from this last swing low is right below where we tested and also tested the year-to-date VWAP. So I really do like this for a setup to the upside. My far end target is going to be about 48 to 50, would be this higher end right here. As far as an entry to go long, I'm going to wait for a potential dip, maybe Monday or Tuesday, and look to take it to the upside as it does look great. For those my targets, that's my stop level. Like I said, I'm not in it, but that is how I am looking to play it to the upside. Now, as far as which option, position, and stuff like that, I guess we'll have to wait and see when I pull the trigger. And if you're, yeah, that's pretty much it. There, targeting up here near 40, near 50 again. But yeah. So that's all, and I even believe it's in a, okay, yeah, it's in a squeeze. It's starting to get a slingshot squeeze as it's bouncing and moving hard with early end signals. So yeah, definitely think it looks solid. So Zillow, like I said, targeting 50, looks great off the 50. But like if I mentioned, if we get a little bit of a quick pullback and then buy that dip to the upside, if it does happen. Now next in that sector, we'll cover Meta. I almost went long Meta down here, but I didn't have the courage because of the state of the market. So I do like Meta for the upside, but there is one thing I want y'all to be aware of, even for those of you that are currently in it. It does look great to the upside as it came down to this point of control right here. It held and is pushing up. Great, we're about to this point of control. If we hit this level about 190 and get a pullback, I would look to go long and play it up, but I'm not aiming past this level, which that level is currently at, actually, I believe I could click over here. Sorry, I'm a new TV user. Well, I thought it would. Guess not. Oh, well, guess I'm experimenting there. So 196. So why 196? 196 is the all-time highs anchored VWAP. So just in a nutshell, if I scale all the way to the all-time highs where Meta was before it started falling to its death, that is where the buyers and sellers are meeting or averaging. And if we get above it, I think it's great back up to the upside, but this is basically the pivot point, if you will. But I do like it Meta on a pullback. Say it does come back a little bit to retest this anchor VWAP from here. Take it and then playing it back up to the VWAP, I think makes sense. A retest does seem like it wants to happen. So that's Meta. And also, I didn't cover it on here. Meta. Well, all right, there we go. Finally. So what I do like about it here is it rallied, like we had earnings, got huge gap up, pulled back to the daily 21 EMA, and this is also, this orange out level was also a 3-month point of control level. So it held the support. This is basically telling you there's volume support right here, and there's also the 2-year point of control on this level. So it pulled back and held. But remember, it's right here. If we can get a quick little pullback, maybe just a quick little one before coming up to these highs, down to the back to the 21 EMA, and then I think that'll be the play back up to about 200-ish. So that's my thoughts on Meta. Another one next up is I talked about Zillow, talked about Meta. Next, let's talk about some financials. All right, so first up is going to be JP Morgan. JP Morgan looks great. It's been hitting its year-to-date VWAP and its earnings anchored VWAP as well. And it looks great. Like from here, if you're a chart pattern trader, you can see it has a solid looking ascending triangle forming after hitting its 50. So you could play the breakout. So you get a big candle like this, or you can wait for the breakout, wait for the pullback, and then play it back up to the upside from there. But you can see how it just looks great. It's actually just everything is bullish in a nutshell. Just looking at the labels, everything's bullish. Stacked EMAs, it's at the highs. Looks great. And now from a buyers and sellers perspective, it's been hitting the year-to-date VWAP and the anchored VWAP from earnings and just bouncing up every time. The next level, as far as volume resistance goes, there is a point of control up here at basically 147.50, but it may start to slow down at about right here, and I'll label it. It's because that's where this node gets big. So I'm going to go across and then about right there. So this is like the levels you would want to start scaling out of, which is basically 146.50 up to about 148.50. So that's where your targets would be, depending on what triggers you to get in. But I do think JP Morgan looks great for a bullish idea. Now, besides JP Morgan, I am liking American Express and Visa. So American Express, let's talk about here. I have it already laid out for you where my stop and targets are. Just like everything else, I do want a pullback. And actually, let me crunch this a little bit here. All right, so I would like a little bit of a pullback to basically 176.50, which would be this zone here, and I'll explain it. So before I do that, let's look at AXP. And I'm working on transferring these Thinkorswim charts over to TradingView so I won't have to juggle it so much. Okay, so American Express, above all the key moving averages, huge gap up on earnings, been consolidating. And after that huge gap up price and the consolidation, it just waited for the 21 EMA to catch up and hold it. And look, it's been holding above the 2-year point of control. So, volume support, moving average support, a great little pullback buy, and it's up. Now, I do want a pullback before taking it back higher. Where am I going to look for a pullback? I'm going to look for a pullback right at, I'm thinking about maybe 170, we'll call it 177. Why 177? So I'm going to zoom in here. This is the 5-minute chart. So this upper yellow line is this anchored VWAP. So I have an anchored VWAP from the last swing high because that's the last place where the sellers were in control. So if price can pull back to about this area, that's where I want buyers to still remain in control. I'll even consider buying down here and then use these as my stop levels. Like if price ever gets on the other side of it and starts to push lower from there, I'll consider a stop out. But I will consider these two prices basically 175.75, 176.99 for an entry to take back up to basically 181, and then this far end point of control up at 185. So I think it looks great to the upside. From that perspective, now next was Visa from the financial sector. All right, so Visa, very similar to what's going on here. Price consolidated, pulled back. Has reclaimed the year-to-date VWAP, reclaimed this last swing low VWAP, and whenever it did fall, all it did was base right here where all the volume has been formed, and the next target to me looks like about 230. And the way you could view this, and I'll pull up my Thinkorswim here in a moment on it so you can see moving averages and such. But if right here was support and we reclaim the areas where the sellers need to be defined as in charge, then that opens the door for a push up to here. And from that point, you just have to pick your entry. And I do think a little bit of a pullback makes sense as well. So look at Visa. So you see right here is also just a pullback, a dip below the 50-day SMA, kind of oscillated, almost got close to the 2-year point of control. Bounce, and it looks like it wants to rally back up, like I said, to about that 230 level. I think it looks great for a dip buy. I don't think rushing in on Monday makes sense. Like I do think you should be a little bit more disciplined and not have the FOMO. But if you get like a little bit of a dip, a little wick, and then you can look to take it back up. All right, so covered those. We covered. Now let's take a dip into the tech sector. All right, out of the tech, we'll cover Microsoft, and then after that, all we have is AMD and AMAT. So Microsoft. Might as well start plugging in Microsoft over here because we know how long it's going to take. All right, Microsoft pulled back to its 50-day SMA, reclaimed all the moving averages, reclaimed the 2-year point of control. So to me, it's a pullback to support the 50-day SMA wants to rally. You can notice a lot of things have pulled back to the 50-day SMA, which is interesting. The reason I say that because I remember when the bear market first started, our rallies would go past the daily 21 EMA, which used to be the thing we would look to go short. But in the volatility of the bear market, I noticed I always hit the 50-day SMA. Well, as things are turning, as you notice through all these tickers, everything pulled back to the 50-day SMA. So I wonder if that's, while volatility is high, that may be the area worth watching. All right, so like I mentioned here, down to the 50-day SMA, above the point of control, bullish engulfing candle, got the confirmation trigger to the upside. I do think waiting, like I said earlier, a pullback may be good, or it could actually maybe even potentially play in this one on Monday. I do think waiting a little bit for your targets and give yourself some time. Let's say earnings is out in May, so you will have to get some time to hit these far end targets. But the setup here that I'm watching is I have anchored VWAPs from this swing high and this swing high. And why those swing highs? Because even if you bought this high, all the buyers that bought up here all the way here in this flush through all the volume, now the buyers are still in control from this. So not to say that these levels or that these buyers aren't feeling pain. They absolutely did. But from a volume perspective, the buyers are in control from there. We reclaimed the year-to-date VWAP and all these other VWAPs, and you could also see this point of control HVA held. So we rallied up, flush to support. Next, I do like the target up to about 260 to 264-ish, this point of control right here. And if it can break through all the way up here, it's probably going to take some time. I don't think it's going to work immediately, but that is I'm looking forward to play. I was thinking if there was a squeeze or not. But yeah, that's my thoughts on Microsoft. Now, as far as what strikes, how am I going to play it, that depends on the day and what's happening. But I think if I get a little dip and then catch it to the upside, it seems like a great plan. All right, Microsoft. Now we're going to head over to the semis. All right, so one is AMAT. Personally got into this one on Friday, but still looks great, and I wanted to share it with y'all. So if there is a little bit of a dip in AMAT, I think it is worth buying to go long in. And the setup here is very similar to what I've shown a lot of them. It's one way I've found to buy the dips quite high probability wise, right? So rallied up to this final target, which is HVA level. I have an anchored VWAP, and that's where the sellers were in control. And I have anchored VWAPs from these major gaps in the year to date, and you see those held as support as well as this point of control, right? You can't deny this point of control held. Hit it, waited for the reclaim of this anchored VWAP. And then now, for me personally, and the reason I mention this is there's still a chance for others to enter potentially on Monday, is I have a stop below this HVA, which is the month where all the volume's at. We're above this VWAP, so you can simply see that it wants to support's going to hold, and all the buyers are in control based off the anchored VWAP, and look for it to push back up to basically 124, 125. So I do like AMAT, and another one is AMD. AMD, I think, looks really great. As you see there, I have a target of 85 and 90. Those are really far targets. Like, you will have to have time for those, but I think they look great to the upside in that nature. So the setup here, let me minimize that, pull up that there, AMD. All right, well, that's loading. Okay, AMD, same thing, rallied up to this point of control where all this volume was at, rallied up there, pulled back to this point of control and the year-to-date VWAP. Like that's where for the year the buyers have been in control, and also from basically the swing low. Price has been holding. I think it looks really good for a move back up to about 85 and 90 based off of the year-to-date VWAP, this point of control, like stops. For me, it's an easy buy. You want to go long, stop on the other side of it, and then you just let it ride. You could use a VWAP to trail it, or you could just use options and scale out along the way. But I think this setup looks great based off of that. It came down to support, anchor VWAP, stop on the other side, and here are the targets. And these targets are based off of this point of control and then this one as well. So let's pull up over here. So AMD, see, it came down to the 200-day SMA, oscillated. It's right at the bear market point of control as well. So the way I view it, pulled back to where volume support's at, and you would expect it to come back up and test the highs. The question is, since we're trading options, is when, but nonetheless, I think that's a great dip buy. I'm not sure if it's in some squeezes. Yeah, it is. It maybe catch a slingshot squeeze. There is even a high-low buy, high-low pro buy. It's at the entry zone if you want to play the slingshot back up as well. So lots of bullishness that is visible there to me as well. But that is it. That is all of that I have on my watch list heading into next week. I hope you all found this helpful. If you have any questions, feel free to ask them. And everyone have a great and wonderful rest of your weekend. Take care.